The following is a presentation of TFNN. Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, everyone. Happy Wednesday, August 29th. Hump Day. Welcome to another edition of Breakout Investing on TFNN. Thanks very much for tuning in. My show used to be 2 days a week on TFNN. It is now 5 days a week, Monday through Friday, 3 to 4 Eastern. So be sure to check it out. Got some good phone calls yesterday at 877-927-6648. Feel free to give me a call today, 877-927-6648. If you can't listen to the show live, no worries. You can also pick it up as a podcast on iTunes, so be sure to check that out. Leave a review if you like, and you can also listen to TFNN programming if you're out and about, not in your car, but walking, taking a run. Just pull out your smartphone, handheld device, open the browser, type in tfnn.mobi, tfnn.mobi, and you can listen to the stream that way as well. And I'm going to be going over charts as I always do on the program. If you want to look at charts right along with me, you can do that with Tiger TV right on the homepage of tfnn.com. The show is carried live on Channel 1, and it is archived on Channel 13. Tiger TV is also viewable on your handheld device as well. Checking in on the NASDAQ Composite. Boy, the market sure is trading consistently here. After a higher volume reversal for the NASDAQ last week, the NASDAQ Composite has just been hanging in there, working on 4 straight up days here. Not a whole lot of volume. Lack of volume is a very old story in the market here. I suspect volume will pick up once the summertime comes to an end and people return from vacation. So we'll see if new money comes in from the sidelines or if money comes out of the market. But right now, the NASDAQ Composite up close to 5 points today, trading up near its session high to 3,082. And we'll take a look at a weekly chart for the NASDAQ Composite, and we'll see that it is still holding above its 10-week moving average here, which, as I've been saying in recent shows, this would be a likely support level. I suppose if the market does come in a little bit here, depending on what Ben Bernanke has to say tomorrow, depending on what the ECB has to say on September 6th, depending on what the Fed has to say at its two-day meeting on September 12th and 13th, Composite could pay a visit down to its 40-week moving average, which is down at 28.96. But I think that would be a pretty sharp pullback. That would be about a decline of 6% or so off its recent high. So let's look at 29.88 as the first likely support level for the NASDAQ. I've been saying it in recent shows, but it bears repeating if you're listening for the first time. You can see the NASDAQ looked like it was intent on testing its March-April high over here. It stopped just short, and now it could be ready to add a little handle area here, possibly a cup with handle pattern. A handle area is where there's one last shakeout before a possible breakout. So wouldn't be surprised to see that in the NASDAQ Composite after a big run for the tech index. And really the S&P 500 is in the exact same boat. The NASDAQ has not yet taken out its spring high. The S&P 500 did, but was turned back. It's sort of moving sideways, consolidating gains here. Right now, the S&P 500 up 2.5 points to 1411, 1412, thereabouts, still holding above support as well. Let's check in on the Dow Jones Industrial average, up 21 points right now to 13,124. So all indices continue to hold above key support levels. Of course, we do have Ben Bernanke speaking the day after tomorrow at the Kansas City Fed Economic Symposium. Draghi was supposed to be at that meeting. He was going to be part of a panel on Saturday, one day after Bernanke's speech. I think David White said that the speech starts tomorrow at 10 a.m. Eastern, if I have that correct. So, I'm kind of on Goldman Sachs' side here. They came out with a note yesterday. I mentioned it on the program that they're really not expecting earth-shattering news from Bernanke tomorrow. Or Friday, I should say. His speech is entitled "Monetary Policy Since the Crisis." So Goldman's saying he's probably not going to outline anything we don't know already. In fact, Goldman thinks that another round of stimulus at the earliest is going to be in December, and it may not be until 2013. So a lot of that's going to depend on what the jobs report shows. That is coming 1 week from Friday. But I think it's safe to say that the Fed is still concerned about the economy, and wouldn't be surprised to see stimulus before the end of the year. But there's still a big camp of people that thinks the Fed, won't act on September 12th and 13th. It'll be interesting to see if that is the case, how the market's going to respond, because a lot of good news has been built in here pretty quickly, no doubt about it. Volume today, as usual, pretty light. We had yesterday on the New York Stock Exchange 524 million shares. Its average daily volume is about 700 million, so well below average yesterday. We're actually tracking pretty close to that level today, maybe just a little bit lighter. Same with the NASDAQ, tracking a little bit lighter than what we saw yesterday, 1.34 billion shares. Average volume for the NASDAQ composite these days about 1.5 billion. Taking a look at crude oil, down at 0.9% today to $95.49 a barrel. I think news just hit within a matter of minutes that Hurricane Isaac has been downgraded to a tropical storm. Still very slow moving. But it has been downgraded to a tropical storm. Still a lot of rain, though. It's a very slow-moving storm, so it's going to be wet in the Gulf region for the foreseeable future, just because it's so slow moving. But oil down 0.9% today to $95.49 a barrel. I mentioned yesterday the refiners are still on fire here, but very extended. I just want to remind people again. I think it was on Fast Money. It was either the halftime report or maybe it was in Fast Money on CNBC yesterday. Somebody was saying that the refiners are still buyable up here, and I am just not a big fan of chasing extended stocks, and whether it is Delek U.S. Holdings, ticker DK, Tesoro, TSO, or Western Refining, WNR. In each case, you're looking at stocks that are very, very extended. Here's a look at Delek U.S. Holdings. This is ticker DK. Again, the last base breakout was over $17 a share here back in June. So at 17, the stock was very interesting. At $26, you know what? It's extended. Just not buy. This is probably going to be ready to base and consolidate gains, so I'm not going to chase that up here. Same with Tesoro. Tesoro is another stock that was very interesting at $30 a share. Here was the start of the base earlier this year, back in March. Big long base, big breakout right here. Breaks out over $30 a share. It's a $39 stock right now. Still showing strong technical action, kind of moving sideways here. Let it base, let it consolidate gains. You could get a new entry point, but I would not buy before a new base complete. So Tesoro, interesting, over 30 when it broke out, but at $39 a share, very extended. And finally, Western Refining, continuing to show relative price strength, working on 3 straight days of gains here, up another 2% today to $27.66. Western Refining, interesting, when it broke out over $21 a share back here in June, it just hasn't based. It's been moving higher. Needs to take a breather, consolidate gains. Western Refining can see its 50-day moving average down here around $24. When the market does pull back, when the market does come in, we'll just look and see how these refiners pull back. If they pull back in above average volume, start to see signs of institutional selling, I would still hold off. But low volume pullbacks to support is a different story. That's more of a healthy pullback. Would tell me that institutions are still in the stock and could get an entry point here. But for right now, I'm going to take a pass on the oil refiners. Taking a look at gold today, down $6.70, 0.4% to $1,663 even an ounce. Take a look at the Spider Gold Trust here. GLD right now down 93 cents to 160.71. Still holding above its 200-day moving average here. This is a case where the 200-day moving average is above the 50-day. The GLD recently found support at its 50-day moving average back here earlier this month in August. Starts an uptrend, reclaims the 200-day moving average, and is still holding above. But we'll see if that is a support level for now. The 200-day moving average at 160, the GLD right now at 160.71. So trying to hold on to support here. Interesting kind of correlation between the GLD chart here and also the Philadelphia Semiconductor Index. Very similar technical pictures here, and just like the GLD, the SOX recently moved above its 50-day moving average, moved above its 200-day moving average here, and is firming up above the line as well. So the SOX, Philadelphia Semiconductor Index, is trying to hold on to support here at 393 thereabouts. The SOX right now trading at 398. So still holding above support here as well is the Philadelphia Semiconductor Index. Okay. Mentioned the meeting this Friday, Bernanke's speech. We'll see how the market reacts. I'm really not seeing a whole lot in terms of buying opportunities here. The market has been running higher for a while. My Ultimate Growth Stocks model portfolio has got a fair number of stocks in there. I sold a stock earlier today, but I still have 10 or 11 names in there that are working nicely. And because they're not flashing any sell signals, because all of them are still acting generally pretty good, I'm in no hurry to sell. So I'm sticking with that story. I wrote a piece today over at realmoney.com just saying that the bear case still outweighs the bull case still outweighs the bear case at this point in my view. I can understand the bear argument, no question about it. I know that the case is pretty good one for a little pullback here, but I hear Doug Cass over at Real Money Pro talking about a triple top for the S&P 500. I see pundit Dennis Gartman, who writes the Gartman letter. He, according to CNBC, moved to the sidelines and is, getting out of the market's way here. But without any meaningful sell signals in this market, it just seems to me to be a little premature to start taking quick profits here. Now, again, on Friday with the Jackson Hole speech, the market could be disappointed. I don't think it's going to be any big surprise, not to me anyway, if we don't hear anything new and specific from Bernanke. But the market's going to react how it reacts. Could give, if the market doesn't get anything new from Bernanke, could give it a reason to pull back a little bit. But again, the 10-week moving average for the S&P 500. Let's go back and look at that chart of the S&P 500. I think that is a likely support level. S&P 500 right now trading at 1412 thereabouts, and the 10-week moving average at 1386. So another 24 points or so, 25 points to get down to that price level would be a very, very moderate pullback if it were to happen. So we'll see how it all plays out. Heading into the first break, folks, thanks very much for listening. Ken Shreve with you, Breakout Investing on TFNN. We'll be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You you take a hands-on approach to managing your investments. And whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Thanks very much for tuning in. As always, don't forget, if you want to get a 30-day free trial to Ultimate Growth Stocks, you can do that right on the homepage of TFNN.com. Let's see, click on the newsletters tab, investment newsletters, and you'll get information there. You'll also see my name on the homepage, Ken Shreve's Ultimate Growth Stocks, in the carousel. So 30 days free to check out my investing methodology. I am pretty long in the market here. I have several growth stocks that are working, and I want to give them a chance to work. And so if you want to see what holdings are in my model portfolio, which holdings or which stocks I'm recommending now, be sure to check out 30 days free over at TFNN.com. Let's take a look at some earnings stories today. First one we can talk about would be the fresh market. Kind of an ugly day of price action today, no question about it. Shares of Fresh Market actually hit an intraday high of 65.69. Looked like this was going to be an explosive move for the Fresh Market today, but not the case. The stock right now is down $2.15, 3.5% to 59.54 on volume of 3.4 million shares. 3.4 million shares. That is very heavy for the Fresh Market. This is a stock that normally trades about 675,000 shares a day. So, we're talking almost about 4 to 5 times average volume here. So some big sellers in the stock. That's what its price action tells me today. This is a stock still holding above its 50-day moving average at 56.74, but a heavy volume bearish reversal like this, if you've been long the stock, if you've got still a cushion, maybe you're in the mid 50s even earlier, this is a pretty bearish price action today. Now, that being said, sometimes price action can't be explained because the fresh market, the numbers were good. The CEO was very bullish on the conference call. Earnings were up 27% from a year ago to 28 cents a share. Sales up 21% to 313 million. The estimate was for profit of 27 cents on sales of 308 million. So good bottom line, top line beat. Same store sales up about 8%, I believe. Operating margin increased to 6.9%. Expansion plan still going well with the company. So we'll see. We'll see how the stock recovers here. But a heavy volume bearish reversal in shares of the fresh market. It kind of comes to mind Cyberonics, which reported earnings yesterday. This is a stock that has been on and off my radar. But, it wasn't such a great day of trading for Cyberonics. You can see yesterday it hit an intraday high close to $50 a share, but it closed at around 46 and a quarter, 46.50, right down near the bottom. So there were sellers in Cyberonics yesterday. Look at the stock today, up 7.6% to 49.90. So sometimes a stock's price action is hard to figure out, but at least when it comes to the fresh market, I would call its price action today abnormal, to say the least, and that's probably an understatement. Anytime a stock tries to break out in heavy volume and reverses, and just this big intraday price swing here, it's not acting right in my opinion. So kind of disappointing day for the fresh market. Let's move on, take a look at Joy Global here. Maker of mining equipment, has been just hammered by selling in recent months due to slowing worldwide demand for mining equipment. Joy Global right now, after hitting an intraday low of 49.65, trading up near its high, up 2.8% to 54.56. Still a broken stock here, not a stock that I would be thinking seriously about going long. When I go long a stock, I like to see stocks up closer to their highs as opposed to their lows like Joy Global is. But the earnings here were up 16% to $1.79 a share. Sales up 22% to $1.39 billion. The $1.79 a share was well below the consensus estimate of $1.88. The sales of $1.39 billion, mostly in line, just a tad below. Analysts were looking for sales of $1.4 billion. But Joy Global did cut its outlook for 2012 due to, among other things, slowing demand in China. Take a look at shares of Genesco, GCO. Genesco is a Nashville-based specialty retailer. They sell footwear, headwear, sports apparel, accessories. More than 2,400 retail stores in the U.S., Canada, UK, and Ireland. Another stock that is not holding its highs here. I've seen this a lot over the past couple of days. Genesco hit an intraday high of $74.93, almost $75 a share. Recently trading around $71.92, still up 1% on the day, and earnings not too good. This is a solid company, but kind of wishy-washy price action in the stock today. So that's it on Genesco. Headed into break number 2. Big long segment coming up, folks. Give me a call, 877-927-6648. We'll be back in about 3 to 4 minutes. Stick with me.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Almost 25 minutes left to go in Wednesday's session here. Let's see what we got going on in the major averages here. Trying to hold gains. The Dow up 22 points to 13,125. NASDAQ up close to 5.5 points to 3,082. And the S&P 500 up close to 3 points to 1411. Pretty much almost 1412, call it. Big short squeeze today in shares of Joseph A. Bank Clothiers. Big gap up over the 200-day moving average here, but you can see Joseph A. Bank trading right at its session low here. Uncanny, isn't it? These stocks that hit these highs and now are reversing near lows, but still a huge percentage gain for Joseph A. Bank today. Still up 14.5% to 47.67 after hitting an intraday high of 49.48. You know, I've been in these stores, and they do have deals. They're shirts, they're sport coats, their ties. Merchandise seems pretty good. Fits my needs, but yeah, they've got a lot of big sales here. A lot of shorts, though, betting against this stock. Joseph A. Bank is a stock that normally trades about 270,000 shares a day. As of August 15th, short interest was 4.6 million shares. That is unusually high for a stock with an average daily volume of 270,000 shares. So big short squeeze today. Earnings were pretty good and better than what the market was looking for sure. Earnings were up 12% to 83 cents a share. Sales were up 13% to 260.3 million. So good day for Joseph A. Bank, even though the stock is trading near its session low. Taking a look at the U.S. dollar today. We haven't touched on the dollar. Let's take a look at the dollar index here. The U.S. dollar index recently trading around 81.55, up 18 ticks on the day, still trading below and stuck below its 50-day moving average here at 82.59. Still not clear to me that the U.S. dollar is ready to start an uptrend here, so if the dollar continues to stay weak, that should be good news for the stock market. So we'll see how that shakes out. Economic data earlier today, we did get the second estimate to second quarter gross domestic product, came in at 1.7%, a little better than expectations of 1.6%. The first estimate was 1.5%. So I know there were some people that were hoping for a little better number than 1.7%, but still not too bad. And the market is, basically ho-humming the number. We also had pending home sales, more good housing data today. Pending home sales were up 2.4% in July to the highest level since April 2010. The National Association of Realtors Pending Home Sales Index rose to 101.7 in July from 99.3 in June. So that 2.4% is sequential growth. The index is up 12.4% from a year ago. So housing data continue to look pretty good here. Let's check in on the ITB. This is the iShares Dow Jones U.S. Home Construction Index Fund. Still holding near highs. Looks a little bit extended up here, but it's holding gains smartly. Had a recent breakout for the ITB over 1730. So at 1796, yeah, it's just kind of right in that area of being a little extended here. But the longer it continues to move sideways here and hold gains, you could be a buyer on another heavy volume move if it happens. But home builders continuing to hold gains quite well here. At, let's see, was it 2 o'clock Eastern Time, we had the release of the Fed Beige Book. The Beige Book reported that activity expanded gradually in July and early August across most Fed districts. This was compared to a previous assessment of modest to moderate growth. Most districts reported increasing retail activity, particularly in auto sales, and all 12 districts reported increases in home sales, home prices, or housing construction. So that was the details of the Fed Beige Book. Let's take a look at a couple of healthcare names today. I wanted to look at Edwards Life Sciences, a name we've been talking about. Still like the technical picture here as the stock continues to base. It did climb above its 50-day moving average today, up 71 cents, 0.7% to 101.79. Edwards Life Sciences, high-quality company here, good stock, building a nice base. They make products used to treat advanced cardiovascular disorders. Let's take a look at a weekly chart for Edwards Life Sciences, and we'll see a nice base taking shape here. I don't think the stock is buyable quite yet. It is looks like it's ready to start forming the right side of a base. It's only been consolidating gains for a little over 4 weeks, but after a big breakout in this area right here, you can see it could try to set up here again and perhaps take out its recent high just over 105. So like the base that's taking shape in Edwards Life Sciences, just going to watch it for a while longer, see if the base can complete and see if it can attempt another breakout here. Also in healthcare, BRLI, name that we don't talk about very much, BioReference Labs, having a good day today, up 4.1% to 28.55, showing showing good supporting action here at its 50-day moving average. BioReference Labs is a provider of lab testing services to healthcare providers. Should be able to grow annual earnings this year and next in that 20 to 25% area. So excellent fundamentals here, good top line and bottom line growth in recent quarters. Like I said, good growth prospects. The stock has decent fund ownership, still room for more funds to get into this thing because only just over 200 funds had a position in the stock at the end of June. It is a small company, though. Market cap close to $800 million, average daily volume about 200,000 shares. But you do have a good fundamental story here, and again, the stock showing good supporting action at its 50-day moving average here. So BioReference Labs acting well. So move on, take a look at Portfolio Recovery Associates. Some new names today. This is a stock that continues to show relative price strength in the market. Definitely extended here after a recent breakout over 91.36. It is trading just over $100 a share right now, up 35 cents on the day. So I'd be careful about chasing it up here, but a good one for the watch list. The company is involved in the consumer debt purchase and collection industry. So business has been very strong for PRAA in recent quarters. Sales growth has been accelerating, which is always good to see. And they did close to $150 million in revenue in the second quarter, up 29% from a year ago. Return on equity solid at 18%. So we'll see if this can base and consolidate a while longer, but good high-quality name here. Portfolio Recovery Associates. Take a look at Western Digital. This is forming a handle area right now. The question is, will it be able to eventually break out over 45.94? Still has a little more work to do. Pretty much a low volume pullback in recent days, but this is a big cup-shaped pattern. Handle area forming here. Stock's up 6 cents today to 43.56. Looking at a swing point of 45.94. That's going to be the high point set earlier this month. So if it clears 45.94 in good, strong trading volume, remains to be seen if that's going to happen, but it is forming a handle area right now. If new money comes in from the sidelines, this is definitely a high-quality company that could attempt a technical breakout here. Moving on, taking a look at NationStar Mortgage Holdings. They service residential mortgages in the U.S. This is an interesting company. It's up another 2% today to 27.87. And what I want to show you with NationStar is an interesting technical setup here. I think it has the look of an ascending base here. And what happens with an ascending base is you get a breakout, which occurred in NationStar Mortgage Holdings earlier this year back in May. And then you get 3 pullbacks where the stock corrects anywhere from 10 to 20%. And it usually happens over a 9 to 16 week period. So this isn't a perfect ascending base, but you do have the 3 pullbacks here, and you do have the stock approaching some resistance. So if it does, break out over 29, 28.75, 29 with conviction, I know some growth investors would probably be calling this a breakout from an ascending base. It is a super strong stock. Recent new issue. Came public, I believe, last year actually it was earlier this year, in March, I believe. Came public, and around a $14 stock in March earlier this year, but it's been a great price performer. Another company showing accelerating revenue growth from 37% to 90% to 143% year-over-year growth. So company is definitely making a lot of money. It turned profitable in 2011, and growth prospects are very bright, and you have to respect strong price performers like this. So NationStar Mortgage Holdings still on my radar here. Restaurant Group isn't overly interesting to me, but one name that has my eye here is Panera Bread. Panera Bread is setting up in a base here, working on 4 straight gains as it tries to approach a swing point here of 164. Stock was recently trading around 157.78, up $1.25 today. This one's not ready yet, but it is in an interesting setup here. We can take a look at a weekly chart for Panera Bread. Probably one of the better run restaurants out there. You know, Chipotle at one point had that reputation. You know, sort of an institutional quality growth stock, but they had that earnings report, most recent earnings report, where the stock just got taken apart in a big way. But Panera Bread has steady growth, you know, setting up in a nice little base here. Again, just watching this one for a breakout over 164. This would be another example of a cup with handle pattern forming. Got your handle area forming here for a little over 4 weeks. Will it break out? You know, that's what we'll wait and see if it happens. But watching the 164 area for a breakout here. Here's a stock that is a current holding in my Ultimate Growth Stocks model portfolio. I'm really trying to make sense out of its price action recently, but Francesca's Holdings is a little-known retailer. It's a company that operates a chain of retail boutiques that cater to women. It is definitely a speculative retailer. Not a tiny company, market cap of $1.6 billion, so it's it's a viable company here. 650,000 share average daily volume. Stock is outperforming nicely today, up $5. Up 5.2%, $1.80 to 36.23. So it was interesting. It reversed yesterday after reversed and closed near its session low after early strength. And last week it did the same thing, had this sort of higher volume reversal. But it is outperforming today. The thing about Francesca is that it is reporting earnings next week on Tuesday, so we'll just watch how this trades ahead of earnings. But it is a company with excellent earnings and sales growth in recent quarters, big increase in mutual fund ownership at the end of the second quarter. A lot of positive qualities here. The company is well run. Again, they operate women's apparel boutique stores in about 40 states or so, but excellent balance sheet and good growth prospects here. When they do report next Tuesday, earnings are expected to come in at 24 cents a share, up 60% from a year ago. Sales up 39% to $71.1 million. So good growth story going on here. Good relative price strength in the market. I think this one has the potential to do well. Also in the retail space, Ulta Beauty. This is a name we talked about yesterday. Ulta Beauty down 54 cents today to 94.31. Going to be watching earnings from this company as well next week. They report on Thursday, 1 week from tomorrow. Earnings should be up 34% to 51 cents a share, with sales up 20% to $473.8 million. Ulta is another well-run retailer here. Recently moved back above its 50-day moving average. It is working on a base here. Let's take a look at the weekly chart for Ulta, and we'll just see the right side of a base being formed here. Again, a stock that recently, it reset its base count last year, so if it does try to break out over $100 a share, this would be a breakout from what I would consider a second stage base. So we'll see what the future holds for Ulta. And then also next week in earnings, everybody's kind of forgotten about Lululemon Athletica. Remember Lululemon? Well, the stock has come up nicely off its lows this month with the broad market. It was a $54 stock at the beginning of this month, now trading around $65, up 56 cents today. Lulu is going to be reporting earnings next week on Friday. So a week from this coming Friday, Lulu will be out with earnings. Of course, they're most known for their expensive yoga wear. 31 cents is expected, up 19% from a year ago. Sales up 33% to $282.3 million. But Lulu is not out of the woods yet in the retail space. There are so many other better stocks out there. We could see good numbers from Lulu, but this is probably not a stock I'm going to be owning anytime soon. All right, we'll come back, take a look at a few more growth names on my radar here, talk about some economic data for the rest of the week. We'll do that when we come back, maybe talk about an apparel maker that's going to be reporting earnings after the close today. Apparel maker's looking pretty good here. All right, folks, you're listening to Breakout Investing, of course. We will be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Tom O'Brien's daily trading newsletter, Market Insights, has delivered powerful results for subscribers, and now is the perfect time to try it out for 2 weeks absolutely free. We're so confident in the value Tom provides his subscribers in his daily newsletter that through Labor Day weekend only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, completely free of charge. We'll even cover the shipping cost. Cancel at any time during your 2-week free trial to Market Insights and pay nothing, and keep Tom's free book as a gift from us. This offer is only valid for new subscribers. We've only extended this offer once before, and it will only be active for a short period of 2 weeks. So act now to take advantage of this great offer and be ready to capitalize on a more active, more volatile market once traders return from their August vacations. All the details are on the front page of TFNN.com. Sign up for your free trial to get your free copy of Tom's best-selling book today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks, to Breakout Investing on TFNN. 877-927-6648. We got time for one call before we head into the break here. Go to Jeff in Portland, Oregon. How you doing today, Jeff?
Oh, hey, doing really good, Ken. Thanks for taking my call.
You betcha.
Hey, I was looking at the Qs, and I've got it on a daily, and I wanted to kind of get your interpretation of a cup with handle in that chart pattern and how you would interpret if that was a high handle subject to failure, or would you consider that a cup and handle pattern at all?
I would consider it, yeah, I would absolutely consider it a cup with handle pattern. I think all of the indices, as a matter of fact, are in pretty decent technical setups here, low volume notwithstanding. So really, you know, what the market is going to be doing in coming days is going to be predicated on, you know, how it reacts to Bernanke and how it reacts to the ECB and how it reacts to the September 12th and 13th Fed meeting. So I'm optimistic on this, Martin, on this market. I think that the QQQ looks good here. I think it's a breakout candidate, just like I think the S&P 500 is a breakout candidate. You know, but it is tough to, you know, go aggressively long with new positions, so close to you know, a lot of potentially market moving headlines. Like I said at the earlier in the show, Jeff, the you know, the case for a moderate pullback here isn't a bad one at all. And when you get these handle areas that form, whether it's a stock chart or an index like the NASDAQ 100 or the NASDAQ Composite, S&P 500, you know, these handles can come in 3%, 5%, something like that. So I do think that the selling, if we do see some, you know, I think it's going to be relatively short-lived, and I'm optimistic about the distinct possibility for a breakout, not only with the QQQ, but with the SPY and a lot of these other indexes that are setting up here.
Right. What do you think about the handle formation being so close to the high, or really at the high, from kind of the April-March area? It seemed like O'Neill's discipline might have been having the handle form a little bit below those areas.
Yeah, I mean, high handle, so if an index takes out a recent high, and that's in fact what the S&P 500 did, you know, it did briefly move above its spring high. So, you know, a handle area can, a high handle or a low handle, it really doesn't matter where it, I've seen really successful breakouts from high handles, and I've seen, you know, successful breakouts from handles that have formed below highs. But with the QQQ, for example, I have it up in Tiger TV right now with the 10-day, 20-day, and 50-day moving average here. So, I mean, this handle could easily come down to the $67 price level, you know, and still be
acceptable, right?
Yeah, absolutely.
And then when it draws down to, say, a 67 price point, we want that to be on a, you know, decrease of the average 50-day volume or whatever. Yeah,
and typically anytime a handle area forms, you want it, you want to see low volume. You just want to see a little modest retail selling. You don't want to see signs that institutions are dumping shares. So, yeah.
Okay. All right. I really appreciate it, Ken. Hey, thanks for all the info.
Okay, Jeff, appreciate it. Thanks for the call.
Have a good one. See you.
All right. Hey, how's that for timing? Right into the break. All right. Thanks very much to Jeff in Portland for that phone call. We're done for today, but we will be back tomorrow, 3 to 4 Eastern, for another edition of Breakout Investing on TFNN. Ken Shreve is my name. Thanks very much for tuning in. Coming up next, the Tom O'Brien Show, 4 to 6 Eastern. He'll have a lot of good stuff for you. I'll see you back here tomorrow. Have a great afternoon, everyone.